Welcome everybody, it's Ian from CPP Trading. I made this video to show you one of the most successful setups to trade reversals. So I've been teaching this strategy to a lot of traders, and understanding it can really make you a lot of money. So we will look at two examples. I'll show you a trade on pound yen here and another one on gold. We'll do a full analysis, go through all the different steps. I'll show you the entry exit points and everything. And let's get started with the gold trade. This is gold on the 15-minute time frame, and this is a trade I took during one of our live sessions in our trading group. And you just mark some of the important levels here. So we've had a support here early on, the price came down, rejected. Overall, we've been in a bear trend. Already took a few trades on that day and wasn't really looking at taking another one until I saw this setup forming. So we have this range, we've broken below the support, came down, rejected, moved back up. So this is now a resistance, came back down, took a good sell here, made some good profits, and now we're moving up. And what's forming right here, what we see here, is exactly the setup that we're going to analyze further. So let's switch back to the chart on pound yen and look at it there, and then we'll move back over to gold. This is pound yen on the 15-minute time frame. So this trade, this setup is right before the entry was taken. This is how the candles have been forming, and we're going to look at this now. So the price here has been moving down. This was a previous support. Price broke below, moved further down until it approached this recent rejection area, which has been holding as a support. So the price failed to break below. It then came back up, and this previous support should have been holding as a resistance now. However, this was the first candle that broke and closed above the resistance, and this is one of the key factors. So we're going to look at this now on the next chart. Here we have pound yen on the 30-minute time frame. This is a trade review I made in our trading group. So every week I do full trade analysis on a specific setup. People can send trades in or review some of my own trades and post an analysis on all the different time frames, leave comments on it. And this is just one of the charts. So if we look at it here on the 30-minute, we see the same thing we saw on the 15-minute. So the price came down, moved down, approached this rejection area. And as you can see earlier on, it has been a support. So this level has been holding as a support. The price moved back up, and same as on the 15-minute time frame, this is our signal candle, the first candle that broke and closed above that resistance. And this is what we're going to look at. So you see this next candle, it closed bearish. However, it has a fairly large lower wick. So this candle has been rejecting lower prices, and it closed above that resistance, which now is a support again. The same with the next following candle that closed bullish, has a huge lower wick, a strong rejection, is indicating that the bulls are pushing prices higher and the bears failed to push prices lower down. And this is acting as a confirmation of the support level. And this is exactly what we're looking for when we're looking at a reversal. Because if you're looking at taking a buy lower down here, we can't take a buy anticipating the price to move all the way up because we're still below a potential resistance. So we have to wait for the price to break and close above, just what we have here. The entry in this trade was excellent. It was very good as the price broke the high of the previous candle. And the only thing I would comment on, like I did too, is the trade was closed prematurely. So a lot of profits have been missed out because it was closed right within that range. Should have been waited at least until the price had approached the first potential target area, or let it move all the way up to the next higher resistance. So this would have been a good amount of profits that could have been realized if the trade had been left open longer. We will move back to gold here. So it's been taken, like I mentioned earlier, during our live session. So we'll see how the candles are forming, how the price is moving, and when exactly to take the entry, what parameters, what criteria we're looking for, when to close the trade, when to secure profits. And it's the same methodology, the same concept, the same setup, and this is the reversal that you really need to learn and understand, because this is your gold pit, your winning strategy. So this trade here on gold was taken as soon as the price broke the high of the previous candle and retraced And if you look at it, we have here that support that was confirmed to not hold as a resistance because this candle broke and closed above. And this is actually what we want to see. We do want to see a candle closing bearish afterwards. So now a lot of people will think, well, if I'm bullish, I don't want to see a candle closing bearish. Well, that's because you're lacking the experience and the knowledge of understanding price action and really the market structure and the behavior with the psychology behind it. Because having a candle closing bearish like this with a small body, the large short wick, this is acting in our favor because this candle is confirming that this price level here is holding as a support. And if the following candle had immediately broken the high of this bull candle, the probability would actually be lower that the price will continue to move up and reach our target level. So this is favorable. This is what we actually want to see in a scenario like this. Have the price move up again, break through a resistance where we're looking for a reversal, close above, and then see a candle closing bearish, a rejection candle just like this that's moving lower down, and the bulls keep pushing prices back up. The candle closes above that price level, which now turns this into a support. And as soon as we have that support validated and the following candle is starting to break the highs, this is when we can start looking for buys and anticipate the price to move up to the next higher resistance. So let's take a look here on the 30-minute time frame on gold. We can see that the stop is just below the low of the 30-minute candle as well, so that aligns with the 15 and the 30-minute time frame. We've broken the high of the previous bullish 30-minute candle. We're in this range now. We're going to let the price move up, give it some room, and we should be hopefully approaching our target. This is a very, very high probability setup. You can see our risk reward ratio is very favorable. And if you also take a look on the 5-minute time frame for extra confirmation, you can actually see that over here, those two candles with the large lower wicks, those rejections, if you don't know what that means, you should go through the mentorship, join our trading group, learn more about price action and technical analysis, because once you start to understand and be able to read the market, the market is always speaking to you. It's telling you what's going to happen. If you get to understand the probabilities, the market structure, the psychology behind it, trading becomes very easy. There's everything you need to know is shown in the candlesticks on the charts, and you just need to be able to react to it. So let's go back to the 30-minute here, and yeah, we're just gonna let this run. If the price were to come back down below our entry, we would be managing risk, take a partial loss, close some of the position, but this is in a good range. I've seen this setup many, many, many times, hundreds of thousands of times. And this reversal, it's extremely high probability, especially with that sort of confirmation that we already had. And here we can even see that the support is aligning with what we saw on the 15-minute time frame. So if you go back to the 50-minute time frame, we can see the support level. It's the same support level we have on the 30-minute, and even the same support level we have on the 5-minute time frame. And that's a confirmation. That small pullback, that retest of that level that did not hold as a resistance and it's turning into support, this is what this setup is based on. But you have to wait for the candles to close in your direction. You have to wait for the candle with the large lower wick, with that rejection wick. You need to be able to really understand when to get in as soon as the high is being broken. If you have a profitable risk reward ratio, that's what we're looking for. So now you can see here the next 30-minute candle I closed bullish. A little bit of a large upper weight compared to the size of the body. However, it's still moving up. Candle still closed above that support level here. And like I said, we are ready to manage risk you would be ready to take a small loss to just react how the candles are closing. But so far, this is still looking good. This is still looking bullish. We can even take a look here as well on the 1 hour time frame. So on the 1 hour, we can see, candles still open. Our take profit level is just below that resistance that previously has been a support. And we're really anticipating that this price, it's already broken the high of the previous 1 hour candle. And we're really just waiting for volume to move the price higher up. The bulls look strong. They're bringing in a lot of volume. There's a lot of momentum. And going back to the 15-minute, beautiful. See this strong 15-minute candle, broken the highs of all the previous candles. We are still in this range. The size of the bodies are getting bigger. This is all looking good. Now we would have an opportunity to adjust the stop to below the low of this candle here. This would be this would make sense. This would be a good place to move your stop to. And 30-minute here, see, next one, body of the size of the body gotten bigger, so volume is increasing. Like I said, very high probability that this trade is going to reach our take profit level, because they should be retesting this resistance at least once. Whenever we have a support, there we go. So now profits have been realized, take profit level was hit. This was a very good risk reward ratio. Price may move up even higher, but that's none of our concern, because we took a trade, we made an analysis, everything went the way we expected it to go. This is just beautiful. It really shows how reliable technical analysis is, especially if you understand, how prices are moving and you're able to pick up on those patterns and setups. Of course, you need to be properly educated, because if you don't know what the candles means and you can't identify a support or resistance properly, then none of this is going to help you. But if you have that knowledge and you're there, then trading becomes just so much easier. I can pull up the trade review from before, and like I said, I've posted this one in our trading group. So here we have the full trade review of that pound yen trade with the reversal. So I always post all the different time frames. I reviewed this trade as one of the students that took it. So first you have the 1 hour time frame, full analysis, leave a lot of notes to it. This is what we saw before in the 30-minute. We saw that confirmation that this price level is holding as a support, then price is moving up. Same concept we just saw on the gold trade we took before, and here the same on the 15-minute with some more detail. If you want to learn more setups like this and you're interested in this trading style, you like this video, and you want to have access to all the trade reviews every single week, and also join our live sessions and get myself to review your own trades, that's an option as well. Join our trading group. I'll put the link down in the description below. And if you like this video, give it a thumbs up, like and subscribe to our channel. I'm looking forward to seeing you in the next video. Trade safe and take care.